Welcome back to Midpoint. Last day of 2014. Only a handful of hours left to make those millions of dollars in 2014. Time to check in on Wall Street, and that means speaking with the one and only money master, the Newsmax director of financial newsletters, Jeff Yastine. Jeff, how's the last day of trading going?
It's subdued and to the downside slightly. We have the NASDAQ down around 50, 58 points, the S&P 500 down 10, the NASDAQ down 10, and probably more importantly, we have oil down a little bit more today. I saw oil as low as about $52.50 a barrel, and it's down about 2% or so right now. So the trends we've seen in place for the last couple months appearing to stay in place for oil, and the market staying still marginally higher.
Well, there's a couple important stories out there. Let's get to a Reuters story. A Texas-based company, Accelerate Energy, putting a halt to its plans on exporting liquefied natural gas. Are slumping oil prices to blame here?
Yes, they are. And this is probably the first real victim in terms of doing a project that's based on prices for oil that were higher than what we are seeing now. $100 a barrel oil versus $50 a barrel oil. The whole plan for this, for Accelerate Energy, and there's about a dozen other projects on the board so far, similar to it, where they would take natural gas, supercool it, and be able to transport it in these large LNG, liquefied natural gas, tanker ships. And they can do it cheaply here, like $4 to $5 per unit, let's put it that way, not to make it too technical. And then you can take it to someplace like Japan and other parts of Asia where you can get as much as $8 to $10 to $12 per unit for it. So now with the oil prices being this low, Asian buyers don't really need LNG from the U.S. the way they did before, because they can get oil much cheaper on their own. So again, we're seeing Accelerate Energy saying we're taking this particular deal off the boards. And also there's another one that came out today, American Eagle Energy. This is an oil drilling firm. The price of the stock is only about 64 cents a share, but they came out today and said that they're suspending drilling operations, and they do not anticipate resuming drilling operations until crude oil prices improve. And I suspect that we'll see many more firms making announcements similar to this in the months and quarters to come, presuming oil prices stay as low as they are right now, or perhaps even lower, as I think they will.
There are people that are paid to speculate what's going to happen with oil prices and then to look in the future so they don't have to make these emergency plans to halt this production. So in some ways, did this surprise, this drop in oil prices? Did it surprise the speculators out there? Did it come out of left field for a lot of folks?
Well, if you're talking about back in August and September, the expectations there where prices were still, I think, around $100 or maybe slightly below that. Compared to now, I would say yes. Today's news regarding these suspension of drilling operations and the cancellation of this LNG plant is something that would have been expected. And certainly, as we've seen, you can do as much research as you want, but if the markets throw you a curve, you have to just try to handle it. And that's what these companies are trying to do. And despite their experts, despite the economists and the forecasters they have, I'd have to say that all of them were caught rather flat-footed by the plunge in prices that we've seen over the last 4 or 5 months, and they're having to adjust accordingly.
Pleasant surprise for a lot of consumers out there, but obviously people right now trying to scurry and make some plans.
Right. Not if you're in the oil business. For consumers, it's great.
Exactly.
For the oil guys, they're having to make some harsh adjustments.
Yes, indeed. Jeff, you are so good that you can look a year in advance, in this case 2015, on Friday. Tell us about what we can expect. Is there going to be a New Year's hangover, so to speak, for some traders?
I think there's some expectation of that, and certainly the markets have just done nothing but go up. Every dip in the market got bought this year, and that was really the way to go. But there are certain things that have not been discounted yet by the markets. The Fed has indicated that it will raise interest rates somewhere around mid-year, and therefore, again, we're seeing interest rates. The 10-year interest rate started this year, 2014, at 3%, and it's around 2.1% now. That's despite the Fed throwing out all these signals that they are going to raise interest rates. So again, higher interest rates, those haven't been discounted yet. and the impact of the fewer amounts of spending regarding oil and oil exploration, which has done so much for industrial production in this country,
Correct.
is also part of that. So I hear the music. I'll see you next year.
That is your cue. See you next year. Be sure to visit FirCollapse.com to learn how a covert plan can unleash financial havoc. We're coming right back.